Welcome back to the channel, and today we're taking a deep, no-noise dive into Applied Digital Corporation, ticker APLD, a stock that on the surface is still widely dismissed as just another volatile crypto or data center infrastructure play, but in reality represents one of the clearest examples in today's market of how far expectations can lag behind actual execution. As of Monday, January 26, 2026, Applied Digital is trading around $38 per share, up more than 2% intraday, sitting just below its 52-week high of $41.61, and doing so on unusually heavy volume, with mid-morning trading already crossing 22 million shares. A data point that matters because it clearly signals that institutional participation is not only present but accelerating. This kind of volume near highs is rarely driven by retail speculation alone. It reflects active positioning by large funds that are looking beyond daily price swings and focusing instead on long-duration cash flow visibility. The original expectation around APLD was relatively simple and, in hindsight, narrow. Investors believed the company would either evolve into a slow-growing, utility-style digital infrastructure provider or remain tightly tethered to Bitcoin sentiment, rising and falling with crypto cycles. The reality that has unfolded over the past year, however, is dramatically different. Applied Digital has aggressively pivoted into the AI hyperscale race, securing 15-year, multi-billion-dollar leases that fundamentally alter the company's valuation framework and reposition it from a speculative infrastructure operator into a long-term AI capacity partner. This business is no longer just about selling rack space or housing servers. It is about owning and controlling the most constrained resources in modern computing: power, land, grid access, cooling, and execution capability, and doing so at scale. Today, the company has more than $16 billion in visible prospective lease revenue already identified in its pipeline, a level of forward visibility that few mid-cap infrastructure names can claim. While retail platforms and short-form commentary still label APLD as a speculative tech or crypto-adjacent stock, institutions such as BlackRock and Vanguard have been quietly and methodically increasing their exposure, with BlackRock alone recently raising its position by more than 25%, not because of hype, but because smart money understands that AI infrastructure is a finite resource. In the current environment, securing reliable grid access, megawatt-scale power commitments, and GPU-ready footprints capable of supporting hyperscale compute clusters is extraordinarily difficult, time-consuming, and capital-intensive, creating natural barriers to entry that benefit early movers like Applied Digital. Over the past month, the stock has rallied more than 45%, and when a pullback occurred in late 2025 that pushed prices toward the 200-day moving average, many observers interpreted it as a sign of AI fatigue or narrative exhaustion. In reality, that pullback served as a conviction test, because beneath the price action, a roughly $5 billion hyperscaler lease floor had already been established, anchoring valuation expectations and setting the stage for the slingshot-style move that is now visible in today's aggressive intraday trading. Short-term volatility, including brief pushes above $41, followed by pullbacks into the $38 range, may look chaotic or emotionally driven to retail traders. But for institutions, this type of price behavior represents liquidity and opportunity, allowing long-term positions to be built without chasing illiquid breakouts. That distinction explains why retail platforms like Robinhood and SoFi light with alerts during these swings, while desks at Fidelity, Vanguard, and interactive brokers focus instead on discounted cash flow models and multi-year lease visibility. The most important catalyst underpinning this entire thesis remains the 430-megawatt AI factory campus. Because in today's market, data centers are no longer just physical buildings. They are effectively power assets, and power availability has become the true currency of AI scalability. Applied Digital's stated long-term objective of reaching 5 gigawatts of capacity by the early 2030s may have sounded unrealistic just a year ago, but with a $2.3 billion cash position and long-term contracted revenue visibility, that goal now appears achievable rather than aspirational. From a technical perspective, the stock's behavior has also shifted. with the 20-week moving average flipping from resistance into support, a subtle but important signal that buying pressure is increasingly coming from longer-term holders rather than short-term momentum traders. Fundamentally, the numbers reinforce the narrative. The most recent quarter delivered $126.6 million in revenue, representing roughly 250% year-over-year growth, alongside a strong buy consensus from analysts and price targets that in some cases reach as high as $99, despite the stock still trading below $40. A key reason this transformation has been possible is that Applied Digital's Bitcoin mining background, once viewed as a liability, has become a strategic advantage because years spent managing power loads, advanced cooling systems, and high-density compute environments now translate directly into AI-ready infrastructure. That experience is being monetized through GPU as service offerings, high-performance computing deployments, and turnkey AI infrastructure partnerships with leaders such as CoreWeave, positioning Applied Digital not merely as a landlord, but as an AI enablement partner embedded in the hyperscale ecosystem. In short, the expectation was that APLD would remain a speculative Bitcoin-adjacent infrastructure name, but the reality is that it has evolved into a full-scale AI hyperscale partner with multi-billion-dollar contracts, long-term revenue visibility, and growing institutional sponsorship, which is why the move from roughly $3 in late 2024 to over $38 today cannot be dismissed. It represents the market repricing a fundamentally different and structurally stronger business model as megawatts continue to be monetized and long-duration cash flows come into focus. If you found this deep dive breakdown valuable, make sure to like the video, subscribe to the channel for more high-conviction market analysis, and see you to the next video.